Hey traders, Stephen Kowitzel here with thetradersplan.com. It is Friday, April the 4th. We're going to look at the overall market and then we're going to look at some of the top ETFs of the week. So let's go ahead and dive right in. We're going to look at the S&P 500 and the last couple days have been rough. The Tuesday, Wednesday got really rough. I mean, we had a really nice surge for several weeks, and then the last week and a half or so, it started to pull back, which seems very reasonable if you put this pullback into context of this nice little bull thrust we had. It's absolutely just fine. Now the question is, does it hold, right? Does it hold this 50-day moving average? Because you can see, yesterday the S&P 500 was looking pretty weak in the morning, and then it closed at the upper end of the range, closed right back above the 200-day moving average. So the market is up a little bit pre-market, not a whole lot, maybe 1/4%, 0.3, something like that. So not a big deal, but we'll just kind of have to wait and see really until it really breaks down like below the 50-day moving average. I'm still going to look at the glass half full, especially since yesterday we had a nice pullback. We have a nice flag, or over the last 6 weeks or so, nice pullback, nice flag. We're still above this moving average. It reversed back above support. Does that mean it's going to go straight out of here? No, right? I'm still taking it day by day and not having too strong of opinions about anything. It could crack on Monday and do this, or it could just completely bounce and break out of this flag and do this. So anything can happen. Really just kind of keep that in mind. The NASDAQ doesn't look as good because the NASDAQ is still under the 200-day moving average, but it did, it had a nice thrust right here, kind of cleared this level, it pulled back, and it reversed at the 50-day moving average. So basically, if it falls below Thursday's low, more selling is coming in, right? If it can bounce and bounce out of here, we're going to be absolutely fine. Now, what could happen is it could bounce for a few days, even early into next week, and then not clear this high and then do this and kind of roll back. So just mentally prepare yourself for anything. The wind can blow anyway. So let's go to the ETF. So uranium right now is really the strongest looking ETF or one of the best looking setups in my opinion. You have URNM. You have a really nice cup with handle pattern because look, you have a nice little cup. You can see that you got the handle, you got the breakout, and it's up a little bit pre-market. So I think uranium is looks like a buy right here, with just a stop under Thursday's low, because if it kind of shakes you out of that, right, it's not going to continue to go higher. So uranium is looking pretty good. One other thing I'm noticing about the healthcare over the last 2 weeks or so is really been standing out. And look at really what was in the top 10. We're just looking at yesterday's price action. You have the medical device ETF IHI. This is trying to come back around. Very strong day. You have a nice head and shoulders pattern, in my opinion, with the neckline that got broke yesterday. It's under the 200-day moving average, but it could easily break through that. So this right here is also looking pretty good. When I see a lot of one industry, a lot of one sector ETFs start to move, what I'll usually do is I will go look at the ETF fact sheet. I'll look at the top 10 holdings because, I'll Google IHI ETF fact sheet, and I'll look at the top 10 holdings, and I'll see what are and I'll look at the list of stocks to see which ones are really holding up nicely. So the medical device ETF, I would definitely put that on your watch list. That's looking pretty good. This healthcare ETF is looking even better. IYH, this one is definitely stronger, so you probably want to focus on this more than you do this, the healthcare versus the medical device, because it's already cleared its major pivots, and it's really starting to break out and get close to an all-time highs. So it's funny because there's so much bearishness on the news, right? There's tons of reasons and excuses not to buy or to ignore or to be bearish or all this stuff. And yet there are U.S. indices right now that are, breaking all-time highs and that are within a stone's throw of all-time highs. It's not all growth stocks like it normally is. Like, you're getting into some of these other sectors like healthcare, utilities, and for whatever reason, it doesn't really matter. Like, we want to trade these sectors because we want our money to grow, right? So this one right here is looking pretty good. Let's go and look at what are the strongest ETFs of the week. You can see Nat Gas is at the top of the list, and this one is getting really strong. And the funny thing is, I made money off this one, this one, and then I missed this one. So I made money out of the previous three, and then when it pulled back, or I saw been selling into strength, so I did really good on these three, and then it just absolutely took off, and that's just part of it. No big deal. But I'm not chasing this right here. I mean, this could absolutely pull back, right? So this is, needs to pull back. We already looked at uranium. Wheat, I'm gonna let this settle. If it obviously kind of clears this level, then it could go higher, the 1086. But to me, this really looks in the middle of a parabolic move, or the parabolic move could be over. So it gets really volatile, really choppy, and it's just going sideways. It has for the last 3-4 weeks. So I'm good. Don't need to get in on that. Soybean actually looks really good. It had a nice trend from 21 to 28, right? It pulled back to the 50-day moving average and found support. So to me, I think this is a pullback within an uptrend. I believe you're going to have a continuation. Probably not a bad entry with just a stop loss under this week's low, right? Under this little swing low right here. Qatar, I didn't even notice this one until this morning. It just has absolutely taken off, probably due to oil related, but it's a really strong trend. Let's go to the weekly chart right here, and it hasn't moved like this. Let's go to the monthly chart. It hasn't moved like this in a long time. Now we're looking at the monthly chart, so it's really going straight up. It looks really good, but it's extended, so I'm not going to chase it. We'll go look at corn. Corn is accelerating to the upside. That looks extended. I'm not going to chase it. Turkey, I mean, you could make the bullish case it's now back above the 200-day moving average, but this is a long-term downtrend. So you could say it's breaking out, but there's better trends out there. Pharmaceuticals, all-time high. Look at that. Where's that all-time high? Let me see. That is. So the pharmaceuticals is at a all-time high. Not a bad, and you could enter with just a stop under, let's say, Wednesday's low, so under right here, right under this little area right here. But you have, so a lot of the healthcare is moving, so I think that's definitely an area of research for this weekend for you. If you're looking to build your watch list for the following week, I would definitely look at healthcare, pharmaceuticals, medical devices, and go to these fact sheets. IEH, or excuse me, IHE, IHI, IYH, all of those are just the iShares, and just kind of go look at the fact sheet, and you can have a look-see of them. Let's see if there is anything going on. Sugar is close to breaking out right there. So you really have a lot of opportunity in non-growth stocks, right? And I think that's, as sometimes we see growth stocks are getting hammered. Everything from the FANG to the ARCs and everything, cannabis stocks are just constantly failing. They're getting hammered, but this other stuff is doing good. So just kind of change your mindset. If you're always focused on growth stocks, change your mindset and find out what's working. So I hope this was helpful. Let me know if you have any questions, and have a great weekend.